What's up, everybody? Michael and Coco here. You're watching episode 31 of the Weekly Scan. The Weekly Scan. Give me a little kissy, baby. The Weekly Scan is all about finding opportunities in the stock market for the week ahead. In today's episode, we're going to be covering 3 of my top stocks that are on my watch list. We're going to be going over my trade plan for each of them and following up on last week's stock picks as well. And as for a quick disclaimer, these videos are for entertainment and educational purposes only. If you do not have experience in the stock market, please do not take this as recommendations or advice. This is just my opinions and Coco's. With all that said, let's go ahead and hop into today's show. So first thing is first, we're going to cover the 3 stocks that I went over last week to see how I performed. Now, I traded a little bit more than just these 3 stocks, and I'll make sure to go over that. But let's cover what I did go over as far as the trade plans for last week, and I'll show you screenshots of the orders and entries and all that good stuff. So I started originally on the week of 9/14, which is just about a month ago, and I started with just a $3,000 account to track this weekly scan quote-unquote portfolio. I started with $3,000, and right now at the end of the week, I am at $3,145, so I am up 4.83% in the weekly scan portfolio. This week, we traded VIAC, and as you can see, I bought here right at 30.13 on this day right here on September 28th, and I did what's called a stop buy order. So I put a buy order up there, so if the price were to go above it, I'd get triggered to buy that order, and then I wanted to play that as a breakout. As you can see, I bought in at the very top, and it just started moving down. This is why risk management is just so important. I did not hold all the way down there. As you can see, I had a stop loss below the low of this day at 29.46. My stop loss was triggered, and I came up for a small loss of about $10 on that trade. Now, from here to here, if that's $10, if you would have stayed in, or if I would have stayed in, I would have lost significantly more. This would have been over a $100 loss into the 50-period moving average. Here's ticker symbol NIO, and this trade played out very well. Made around $30 on this trade. We bought in right here at the very bottom of the screen. You can see 14 shares at 19.05. So I alerted it right around this breakout looking candle. We started breaking out, so I got in right there at 19.05 on the breakout. The volume was looking good, and then it started to continue up. Now, you can see multiple sell orders here. This is called risk mitigation. So what I did was when it reached to $20.37, I sold off a small portion of this trade. So I sold off 5 shares. It then got up to $21.87. I decided, you know what? I'm going to sell 5 more shares at this level. I was looking at the Fibonacci extension tool to see where we might get hung up a little bit at. So I sold another 5, remaining was 4 shares. We saw a little bit more of an increase to 22.16. That was right up in this range right here, and that was on September 30th, so I've been in the trade now for 2 days. So I had 2 shares remaining. I tightened up the stop loss and got rid of the remaining shares at 21.47. That was 2 shares. That was obviously a stop loss sell order. And you can see this, the price right now is at 21.18. So right above that was 21.47. It was really just kind of the topping area of this breakout. And this right here was right where that Fibonacci extension level was. And we're starting to get a little bit of a pullback. So nice little trade there. Mitigated the risk along the way. Up $30, and the previous one I lost about 10, so about $20 on so far on these 3 trades. Good job so far. I'm 1 for 1. My last trade that was on the weekly scan was ticker symbol IAG. And interesting stuff here. I thought that we might see a breakout and start moving to the upside. And as you can see, we really did start moving up, but it's been just this sideways action since the day that I notified it right here. So on September 28th, I did get in, but it was a very weird day to get in. I got in when it started moving higher, and then we had this kind of lull throughout the day, and then it kind of picked back up, and then I held on to it. As you can see, I bought in at $3.85, And then the next 2 days, it wasn't moving. So I decided to remove just over half of my position just to mitigate some of that risk. I took a very small loss there, only of 3 cents for those 45 shares. Then the day continued, on September 30th, and I decided to go ahead and get out of the position because there wasn't really any moves necessarily being made at this specific time. So I wanted to go from what I had as far as risk on the table. I wanted to go ahead and remove myself to see, maybe if we get a breakout of this eventually, then I might enter back in. So this right here was a losing trade of only $1. So I will take that losing trade. So as you can see, out of the 3 trades, I lost 2 of them and won 1 and still became positive $20 on these specific trades. So it was a winning week overall on this weekly scan, and I only had to get 33% of the trades right in order to do it. That is why risk management and risk mitigation is the most key factor in all of this. So if you want to be successful in the long term, you're going to have to get really good at mitigating risk and monitoring your risk overall. Now, there was some other trades that I did take off the top of my head. I usually post them on Twitter, and I post them on the community tab. And I posted, I think it was about 2 of the trades. They just hit me hard onto the downside. I got stopped out, so I lost some profits there. And during that time, I wanted to take a short position on the SPY. Or sorry, no, it was a long position on the SPY. And I did post this on Instagram. I posted this on Twitter. So if you don't follow me there, follow me there. And what I saw was an ascending triangle. Now, I don't have the chart up right here, but that's okay. You can go back to my social profiles and see what I was talking about. But it was building some momentum to the upside. So I got in and it just wouldn't break out. So I ended up leaving the position for a small gain of about $14, and that was an options contract. But then what was really nice is I took that gain, and immediately thereafter we saw this really big pullback. So saved myself from losing out a little bit more there or just getting flat. So that is kind of what took place last week. I am in currently 2 trades that I did post on social as well. Those 2 trades, let me see here. I actually forgot the name of them. One of them is TLH, so that was a risk-off move. That is bonds. And then I have AGR, and AGR has been playing out very well for me. I got in at an average cost of $50.75, and I'm already up 3% on that position. The current price of it is at $52.30. Now, that is a utility stock. And the 3 stocks that we're going to go over today are on the utility sector. Why? Well, if you've been watching my market briefs, you would know that the utility sector has been performing in this previous month of September, and it's also performing in October. So it looks like the market is kind of going from a risk on to a risk off. So the 3 stocks that we're going to look at today are good setups, and they're in the utility sector. Let's go ahead and get into it. The first stock is ticker symbol PEG. This is Public Service Enterprise. And really what I want to show off here is we have this ascending triangle, and we're coming up into an area of resistance, and it looks like on good volume we're starting to peak out above it. So I put my trade position right here at 55.55, so maybe a little bit of a pullback. I'll get entered in. I'm gonna have a target of about $60. That's right up in this range. Now I might mitigate along, like up to that, so maybe right around 57.50 to 58. I'll be taking a little bit of profits, as we've already discussed. My stop loss is going to be at 53.97, and that's pretty much right below the low of this breakout candle. And depending on how time goes with this, I might give it a little bit more room to breathe. You're probably noticing some different lines on here. I have the 5 EMA and then the 10 EMA. These are short-term signals or moving averages, and then I have the 20, which is more intermediate. So right now, as you can see, when the blue is the 5 EMA and then the 10 is the red. When we get crossovers like this and it goes above the 22, sometimes we can see spikes up. As you can see right here, we saw it, right here we saw it, right here we saw it. So we're currently right now in that moment of where the 5 EMA is above the 10 and it's also above the 20. So we're breaking above this horizontal resistance. This might be the start of a trend shift. The MACD is above 0 and it's starting to spread out as well. This overall looks good. The RSI is pretty strong right now, but it could potentially move into overbought territory, so we're going to have to monitor that. But that doesn't mean that when it becomes overbought, it just drops right away. You can stay overbought or right up here in this range from 60 to 70 for quite some time. So overall, I really like this trade. Looks strong so far, and it could be the start of a bigger move to the upside. But keep in mind, things can go awry. Things could fall back down, so you always got to honor your stop losses in situations like this. That's ticker symbol PEG. Let's go to the next. Here's ticker symbol PCG. This is PG&E, very popular. This is one of the more higher volume utility stocks out there. Now, at least on my scanner that I use on FinViz. Now, what I got going on here is we're running into a horizontal resistance right here. You can see $10. The price has clearly bounced from there, and then it's been trying to get above and failed to do so, and it's doing so now. This right here is another ascending type triangle. We're building in higher lows, moving into this resistance. My idea is to play the breakout. If we get the breakout on good volume, I think that we can start seeing a move to the upside. As far as a stop loss goes, I'm going to be a trailing stop loss just to kind of see where this could head. So I'd be starting off probably just right below the 20 period moving average. And if we get below that, I might reconsider it later, or just the low of this candle. But this looks like the early stages of a potential breakout. I just want to make sure that we first get above here on good volume and potentially even close. If it looks like we're going to close there on good volume, I'd be entering in. That's why I put the asterisk here, because I'm not necessarily just going to enter in as soon as it hits 10:06. What I kind of want to do is just get a good gauge as to volume and this breakout to see if it will make a move to the upside. 1075 previously had support there, so I can imagine it's going to have resistance. So I would probably be taking some profits right there. That'd be a good target. As far as trailing stop loss, yes, I might follow the 20 period, or wherever the candle opens up at, I might do it for the low of that next trading day. So ascending triangle looks like it could potentially break out. The utility sector is showing some strength. I like this setup too. Here is ticker symbol XEL. Another utility stock. These are all utility stocks, but we have this nice big bull flag, and that's kind of, you might just be able to just call this somewhat of a channel right here. So you can call it whatever you want, but what I see here is we see some volume kind of accumulating up here. It's slowly kind of going from a low to a high up here, so that's a good sign. And if you look at the moving averages, we had the 5 cross over the 10, and then the 10 cross over the 20. So this could be the early stages of a move to a breakout of this upper trend line. If we do start to move up there, it'd be an easy target to hit around 80. I mean, there might be some resistance up ahead, so you want to mitigate some shares as you go. And then the stop loss would be a trailing stop loss. You can follow the 20, or you can even follow the lows of the previous candles. I'll send out updates if I do get into this position on the breakout. My breakout mark would be right around 71 on good volume. Then I would consider that this stock will be moving higher, but we will see. The MACD down here crossed over. That's a bullish crossover. It's heading above 0, so this is the start of potentially something pretty big. As you can see, the EMAs and the moving averages, when they cross above it, like so, when the red is above the blue and it crosses above the green, you can see little spikes to the upside. Boom, right here it happened again. Boom. And then now what we're doing is seeing it happen, take place here. Not all the time, right? We had some chop right here, but this could just be a stage of consolidation, and now it could be potentially that move to the upside. I like these stocks. I like the utility sector right now. Can't wait to update you guys next week on the weekly scan. Coco, do you want to say goodbye? Bye, everybody. See you next week. And the last thing that I actually want to close off with is everyone kind of seemed like they'd be down for the email thing where I can just blast out the charts via an email versus having to post on all this different social media. I plan on putting that all together. Still in the works, but it should be done here within the next couple of weeks. See you next week.